Let's begin on drawing trend lines for uptrend. To draw a trend line for an uptrend, you want to begin by using the lowest low that you can see in the chart to act as your starting point for your uptrend. Next, you want to connect to the nearest ideal low, which is the next closest low that will give you a meaningful trend line. Now, I'm going to explain what a meaningful trend line is and how to find an ideal low in a while later. I'll also be doing a demonstration on how this can be done. After you've connected to your nearest ideal low, you will want to extend your trend line and wait to see if the trend line will be effective in capturing the trend. Now, if it is effective, the trend line will not be broken and there will be repeated touches on the trend line by the stock. Similar to this picture here, where you can see the stock repeatedly touch the trend line while continuing the trend. The last point for uptrends is the trend line will provide support to your stock. For downtrends, the process is similar. You want to begin by using the highest high that you can see in the chart to act as a starting point for your downtrend. Next, you want to connect to the nearest ideal high, which is the next closest high that will give you a meaningful trend line. After you connected to your nearest high, you want to extend the trend line and wait to see if the trend line will be effective in capturing the trend. So if it is effective, it will be similar to the uptrend, where the trend line will not be broken and there will be repeated touches on the trend line by the stock. And the last point for downtrends is a downward trend line will provide resistance to the stock. Here are some points that you have to note when drawing trend lines. An ideal trend line will have an angle of about 30 to 45 degrees. So your trend line should be drawn with an angle that is between the blue and green line, ideally. Now we don't want the angle to be too steep or too shallow, because with an angle that is too steep, meaning more than 45 degrees, the trend will not be sustainable and you will find that the trend line will be easily broken. Now if the angle is too shallow, less than 30 degrees, you'll find that almost the entire stock will be above your trend line and the stock will hardly touch your trend line, which is not good, as this means your trend line is not able to effectively capture the trend and give you any indication of when the trend is about to change. So to effectively capture the trend, there will be many touches on the trend line by the stock. So a strong and significant trend line will have many touches. And another feature of trend lines is they can act as an early indicator for you to know when the trend is changing. Because when the trend line is broken, it is a sign that the trend might be changing. Might be. It's not guaranteed. It's just a possibility. What you should do is you should pay close attention and use other signs to confirm if this change in trend is valid. So why do you have to check if the change in trend is valid? It's because sometimes you will get false breakouts. A false breakout is when the stock breaks the trend line briefly, but the trend continues on afterwards. Here is an example of a false breakout for an uptrend. You'll notice that the stock broke the trend line briefly, but closed above it and the trend continued. One way to counter false breakouts is to use a range instead of just a single line to act as a signal in which the trend is changing. Another way is to wait for a few days after the trend line is broken to confirm that the breakout is valid. So what I mean by using a range is, rather than just taking the breaking of the blue trend line as the signal that the trend is broken, you add a range of maybe 2 to 3% depending on the volatility of the stock. So when the stock breaks through this range, then you consider it to be a valid breakout. So the benefits of using a range or waiting a few days to consider a valid breakout is you will be able to stay in the trend longer because you will not be stopped out prematurely before the trend is over due to the noise and volatility that is in the markets. However, a drawback from using this is the signals you get from the charts will be slower because you will have to wait for the signals to confirm. A breakout ideally should occur with large price action and with high volume. So a large price action refers to the stock making a large move or a large jump, and high volume refers to a high number of shares being traded when the breakout occurs.